Good evening, and thank you for joining us at home in Bethel Park. My name is Judy Scheidler, and today we have Jan Ballantyne with us from Everest Settlement Services. We are going to be going in depth about the closing process. The different terms our buyers use. They use closing, they use escrow, they use settlement. Are they all the same? Is it all the same term, or is there a difference?
No, that's not the same thing. I mean, when you're going to, again, when I sold real estate versus then jumping into this part of the pie, I learned a lot. And you really didn't think much, except as a real estate agent, you would kind of go to the closing and get your check and make sure everybody was okay. Well, there's an awful lot to this process as well. Mm-hmm. In this process, we're making sure, still like you, that all the I's are dotted, the T's are crossed, and closing means you're actually going to the table and you're giving that person, the closing settlement officer, the money.
Mm-hmm. And that's the closing.
That's the closing. And you're getting possession, which in Pennsylvania, 99% of the time, you get possession the day of the closing.
Right, and that's different than escrow?
Escrow means, or a dry closing, escrow means you're not transferring funds, you're not transferring money. They're not getting the keys that day. Mm-hmm. Escrow, and escrow has a couple different things. If it's an estate, maybe we're escrowing money because it's an estate and we need to make sure that the Schedule A has been provided to us for the estate, or the notice of appraisement has been sent to us from Schedule A. So, different things.
So when people use these terms in Pennsylvania, we tend to generally lump them into one category. They all definitely do have a different meaning and application.
Correct.
Okay.
Correct.
So for the purposes of today,
mm-hmm.
we're going to be talking about the closing, or the closing settlement.
Mm-hmm.
To actually get to the closing procedure, there's a lot that goes on behind the scene. And when I talk to buyers and sellers, I usually tell them that the process involves 3 separate entities. Would you say that?
I would agree with that.
And those entities would be the actual property.
Correct.
Because you're closing on the property, but the seller's closing and the buyer's closing. So why don't we talk about closing on the property first, and how we get a property to the closing?
Okay, when we first get an order from a real estate agent or a buyer or seller, what we're going to start with is a title search. And when we order the title search, we're basically ordering the search on the property to see if there are any liens, to see if there are any judgments, to see if there are mortgages on this property, because those things have to be satisfied so we can pass clear title, what is known as clear title. We're ensuring the title company that underwrites for us is insuring the buyer or the lender to make sure that there are any liens or judgments against that title.
Okay. So, and that may sound simple, but it's actually not, and I'm going to throw an example at you. Last summer I was closing on a simple townhouse that had been closed on 3 times before, but the bank found a mineral assignment from 1856. So we get into all kinds of things, and that had to literally be traced down and cleared off, and Everest Settlement handled it, and they got us to closing. But what types of things pop up to prevent a house from being able to close?
Sometimes the people that own it don't own it. That's happened before. Yeah.
They never properly transferred title previously? Or?
Correct. Or maybe there's old deeds, maybe there's old mortgages, judgments that people weren't aware of. Mm-hmm. A lot of people think on an open line of credit, if they have a 0 balance, that they don't have to pay anything off. And on a line of credit, you have to satisfy that at the courthouse. Even if there is a 0 balance, that has to be satisfied at the courthouse. You get into divorces, you get into foreclosures, you get into bankruptcy, short sales. I mean, the list goes on and on and on, as you well know.
And as the title agent, you have to go through, do you have a checklist that you go through, or do these things pop up? There's trails.
We do. We have our pre-closing starts the process. They order the tax lien letters. They order the municipal lien letters as well. and then it goes to our closing coordinators. And then our closing coordinators are really working that whole file until it gets to one of the settlement officers, myself, and there's three others. Once it gets to us, all of the bugs pretty much have been worked out. Now, there are some that, again, with foreclosures, with different short sales, some of those things take a little bit longer, and you're at the 11th hour trying to get things put together before you get to closing.
Right, and with a foreclosure, a lot of that has already been ferreted out or possibly by the bank who has taken
Correct.
possession of the house.
Correct.
Now,
So
does-
we're typically working with a firm
You're
that
typ-
represents the bank sometimes, or the bank.
and how often is, just a question that came up in my head, how often on a foreclosure do you run into things that you thought had already been cleared? Because on a foreclosure, we have a seller who walks away and who abdicates all responsibility in the process and in the closing and in the transfer of the property. And that property is being taken over by a bank who has no knowledge of that property personally, but they have to dispose of that asset. And along comes a buyer, along comes a closing company. How frequent is it that the bank thinks they have clear title because they go through a very, what's the deed called again? It's a quit claim? No, it's
When the
in a foreclosure, the type of deed they usually get. Is it a quit claim deed or something? I think it is a quit claim deed. In a quit claim deed, they only have to go before a judge and show a minimal amount of information to transfer the deed back to them. They don't do a title search to transfer it back. So that falls to you.
It does. I mean, it's just a lot of work for our underwriters to clear the title and to make sure that we're passing clear title. Because again, the underwriters for our title company uses, we use that information to transfer the property.
So the title company, the underwriters for the title company are the ones that are digging into the...
Correct. They're doing the title search
They're doing
for
the
us.
title search. Okay.
And then we're working through that. When we get the title search back from the underwriters, then we're going through each line to make sure that we have everything cleared so we can issue a title policy.
Right. So they do the search to see what they find, and you have to
Clear it.
corroborate all of those facts that they give to you.
We have to clear the title,
Clear the title.
make sure everything is cleared.
Okay. Okay. That's a very complicated process.
It's very complicated. It can take a long time to do. With all of the industry boom that went on in the 2000 to 2008, it's cumbersome. Some can be very cumbersome because there was a lot going on.
A lot of second and third mortgages on properties, and then
Some people forgot about, or
people walked away.
yeah, or maybe they didn't get title insurance.
Yeah, and private transfers. It's buying the house from Aunt Mary.
And maybe we came up with something that was there long ago,
Yeah.
and it didn't show up. And again, title insurance insures you.
Okay. So the property itself has to be healthy and free of
Correct.
all liens in order to make it to the settlement table, to the
Correct.
closing table.
Correct.
How about the seller? What about the seller?
The seller too. I mean, if the seller has judgments, that's going to come up on the title.
What type of judgments? A lienable judgment or
Yes, lienable judgments have to be satisfied before closing.
personal or property?
It just depends.
Okay.
It just depends. If they've got child support has to be paid
Okay.
before you can close.
Okay. Any tax?
Tax liens, municipal liens,
Okay. Have to all be.
and all the municipal liens. Each township is different. Some like water, sewer. It just depends on the municipality whether or not it's lienable or not.
Okay.
So we're just making sure whatever is paid is lienable in that particular area.
Okay. So the seller has to clear up his stuff. And I've worked with sellers who have had to do this. And, after the process, they're kind of happy that they've cleared the baggage. They've gotten rid of everything that's been kind of hanging on their shoulders for years and didn't realize they would do that. Now, as far as the closing process for the seller, too, if they have these types of liens and they're selling the property, that can actually, if there's sufficient money, can be taken from the proceeds and paid out of closing. Is that correct?
Correct.
Okay.
Yes.
So a lot of times if a seller has an encumbered property, they don't have to show up at the table with, a $20,000 check. It can be handled through proceeds.
Correct.
Okay. And that might be a relief for some people.
And a lot of sellers don't come to the closing, which again, we can forward the documents to them, they can get them notarized, send them back to us.
Right, and unless it's a dry closing where we're closing after 5 or something and their transfer of the funds is not
Correct.
available, they can expect an overnighted check for the proceeds of their sale. What's due them?
Well, we don't like to have that happen when you've got a lender documents, when you've got a lender involved, because those funds need to be received the same day.
Okay,
All the funds, everything needs to happen on, if the closing is today, everything needs to be today.
okay,
Or for the seller, if the seller had to send us money, it would have to be prior to today.
prior to today.
Or today.
Or today. And when
We
you're
can't receive
sending-
it tomorrow.
Right, and when you're sending money to them, you know, they don't have to be present. You'll just send them the check certified mail
We
or
can,
whatever.
right, we can either certify the funds to them or we can wire the funds to them.
Wire
Either
the
way.
funds. Okay, so if a seller's out of town, they don't have to make a special trip back in.
Correct. And a lot of sellers don't come, as you well know. Some of them do, some of them don't.
Yeah, so sometimes it's too much of an emotional thing for them to get rid of the property.
It is.
And we understand that, and it's fine. Their agent will normally be at the process to help cover their side of the table and look out for their interests.
Correct, yes.
Now, what about the buyers? What do we do with buyers now? I mean, they're buying the property. Are they lienable? And
They too have, if they have any judgments or liens against them, I mean, we pull their name as well. And again, if they owe back child support, no, that's going to have to be paid before they purchase the home, because otherwise that can be attached to the real estate.
okay. Now, do you handle cash deals?
We do handle cash. They're great, aren't they?
So with cash, you do a background check, and then what do you do?
We do the same thing. I mean, we check the buyers, we check the sellers, we should do the land, and again, they're much, much easier. But again, they have to have either certified funds or cashier's check and bring to closing. They can't write us a personal check anymore for over $500 because our underwriters won't allow that.
Okay, so whenever we get to the closing table, we've already cleared the property, we've cleared the seller, we've cleared the buyer, and I'm just going to ask you real quickly. Buyers and sellers have to bring proof of identification to a closing.
They do, and that has been a big issue sometimes. We have to have a government-issued ID, whether it be a driver's license or a military ID card or a passport. Has to be government-issued. It has to be valid, which means it can't be an expired driver's license.
And just real quick, if it's somebody immigrating, a green card is a valid form of identification if it's current.
If it's current.
If it's current. Okay. Now, let's move on to this closing process and what we can expect. When we, as a real estate agent, write a deal for our buyers or for our sellers, we present them with something called estimated costs to the buyer or estimated costs to the seller. And you'll get a sheet looking something like this. And it gives you some expenses you can expect to incur from closing and mortgage, taxes, a breakdown of how charges will be applied and credits will be applied, and then a breakdown of your mortgage payments. When we do this, as real estate agents, we don't have knowledge of what your bank's going to charge you. We have a general knowledge of what a closing company is going to charge, because there are some guidelines to what they can and cannot charge now. So we give you what we call an estimated cost to the buyer, and a bank gives you what they call a good faith estimate. And the two may be very close, or they may not be very close, depending on how the bank tallies up the charges. But at the end of the day, you're all going to get this when you go to closing. Whether you're a buyer or a seller, you're going to be getting the HUD-1. And I just want to take a couple minutes and go over this HUD-1 because it can be a little bit complicated. Trying to get a buyer and a seller to justify the real estate's estimated closing costs, the bank's, which I don't have a copy of, good faith estimate, and we're putting it together on a HUD-1. First of all, a HUD, it makes us thinking of government, housing and urban development. Is that who controls the HUD, or is that just a coincidence?
Currently.
Currently. Is that going to?
That is going to change August 1st, and the CFPB, Consumer Financial Protection Bureau, is going to be in charge of the closing disclosure, what is going to be called the closing disclosure. So it starts August 1st, And if a buyer applies for a loan August 1st or after, then they're going to have to close on the closing disclosure and not the HUD one.
Okay.
So in August, we're going to be doing closings on both, depending on when
Maybe even
they were
September.
written.
Yeah.
Maybe.
So for the purposes of right now, chances are everybody who's currently in the pipeline is going to be using the settlement statement from HUD 1.
Correct.
So when we get this statement, the front page is divided up between the borrower's transaction and the seller's transaction. And there are a couple of things that just are going to pop up to people right away. They're going to be looking at this going, okay, I bought the house for $180,000. And there's settlement charges of $7,390. What are these settlement charges? So on the HUD, how would you explain this to, because we've sat through closings.
We have. So typically what I do is I start on the third page. The third page goes over what the good faith and what the HUD 1 charges. It compares them. So what the lender typically, if there's a mortgage, it goes over, compares the good faith with what's now going to be on the HUD 1. The HUD 1 cannot increase. It can't be higher, the HUD 1. Then we go down to the next bucket, which talks about the charges that cannot increase more than 10%. And again,
I'm going to put this up at Home in Bethel Park's website. So anyone who has any questions about these different documents, there'll be some samples that you can download and take a look at right over at homeinbethelpark.com. I'm sorry.
That's okay. And when we go over that, again, that has to be in compliance as of right now, and they can't increase more than 10%. So meaning the HUD 1 cannot be 10% higher than what was quoted to the buyer on the good faith estimate. And then they have some miscellaneous charges that can change. And then we go into the loan terms, which when they changed the settlement statement to look like this years ago, this was a really good thing, because it used to be when I did closings, I wouldn't get to the rate or the loan amount or the years, the terms, until I got to the note. And then it would be like a heart attack. So this is really, really good for people. So if there are problems, I go over this right away.
Okay. The 10%, is that 10% of the cost to close or 10% of the entire closing?
It's over the charges in that bucket.
Just double checking, because buyers and sellers, buyers change how much they're going to put down on a house, and those things change. Okay.
So if their rate for some reason is not correct, we don't see a lot of prepayment penalties as we did 10 years ago. We used to see a lot of that when you had BC lenders. We don't see a lot of that anymore, but it does tell them what their taxes, homeowners insurance, principal, interest, and if they have private mortgage insurance, what that payment's going to be. And I do think that people typically 99% of the time say yes, or that they do agree with what I'm showing them on this settlement statement.
Eventually. And there's a couple things that are on here that may or may not appear or may not happen, a survey. People can oftentimes just waive that survey.
Correct.
But if you see that charge, we're showing a good faith estimate here, which is kind of low at 85 from the bank, because that's bank. And you're showing 450. Typically, that's more realistic of what a survey would be.
Correct.
We're also showing a pest inspection. Most properties will need that to close, correct?
Well, government property. If you're getting a mortgage and it's a government FHA loan, they're going to need a pest.
Yeah, and most conventionals also want it.
No, conventionals typically don't need a pest.
They don't need it.
Don't need it.
Oh, okay.
Most of them don't.
Okay.
Again, you might have those stray lenders out there that require that, but most conventional loans don't require a pest.
The pest inspection, we've had pest people talking, that's about the termites, carpenter ants, and stuff that'll eat away at your house. You do want to get that, even if your bank doesn't make you.
You do want to.
Okay, so we have charges that in total cannot increase more than the 10%, and that's in that little, you're calling them the little section or bucket. And then charges that can change, and that's down below where we talked about the survey, the pest inspection, and so forth. So then what do we do? Because we've got a good handle on what the estimate was compared to the HUD.
Yes, so when I go over the terms of the loan, typically on this third page, once I go over that, I ask the buyer, is this what you were expecting? 99.9%, they say yes, and then we move to page 2 of that HUD 1.
Okay.
When we go over page 2, I go over the buyer's fees first, go straight down the list as to what everything is. I go over an escrow, what an escrow account is. If the lender is escrowing for taxes, I explain to them what that is. And typically when you're doing homeowners insurance and you have a lender that's escrowing for all of these, typically for homeowners insurance, taxes, you're probably escrowing 14 months because again, there's going to be 12 months going back and forth between seller and your escrow and also what you're paying up front.
Up front, because you can't start your escrow account with the bank with a zero balance.
Correct. Now again, all escrow accounts for taxes and homeowners insurance, used to be 15 years ago, we didn't have this aggregated adjustment that you see now. Because escrow accounts are all non-interest bearing accounts, they now do a calculation and they back money out. Because again, it is a non-interest bearing account. People didn't like the fact that the lenders were holding a lot of money and they weren't making interest on that money. This was in the days when banks were paying interest, a lot of interest.
Right.
Unlike today.
Unlike the 1% you might get today.
Yes.
Yeah.
Yes.
Now, on this, you have the appraisal fee, and that's always going to be part of the process if a bank is involved.
Correct. That top bucket is typically when you see the 800 grouping. Again, this is going to change on the new closing disclosure. It's not going to look like anything like this. So it's going to be a big difference when you see it come August. But for now, the 800 grouping is about lender fees.
Lender fees. And that's the appraisal, the credit report, the tax service, the flood certification. Just about every property now is going to require a flood certification. I think every property does require a flood certification now, doesn't it?
Well, no, they say now on the flood certs, they used to say if you're located in the flood zone, you're going to get flood insurance, and usually it's very expensive.
Right.
Now they're saying the actual cert states that if it's ever determined that you're located in a flood zone. So you might not need it now. And then whenever, it does state though, if it's ever determined you are located in a flood zone, flood insurance will be required. So again, if your loan gets sold and that lender who buys your loan determines that you're located in the flood zone, whatever that definition may be, you're going to pay flood insurance.
I've heard a 10-year floodplain, 100-year floodplain. I've heard it all different ways. But so the certification is on every property, and that certification is going to tell you whether or not you
currently are right now.
Yeah, need it right
now.
That's
that
something,
could change.
Yeah, that's something that a lot of the older sellers never ran into. They've owned their houses for 30 years, and there's a lot of fees here that are going to be new to them.
Correct.
So what's next? I'm sorry.
So no, that's fine. So then we go over, like I said, we collect the interest again from the day of the closing to the end of the month. And then we actually, like if you were closing today, which is the 16th of March, and let's say your first payment then wouldn't begin until May 1st.
Okay.
So the lender's collecting the interest from today to the end of the month, and then that first payment, which is May 1st, is actually for the month of April. Most people think that it's for the current month, like May is for May, and it's always for the previous month.
So it's the same as a credit card bill. You get your credit card statement on the first of the month, and that's for your charges for the previous month. So you get your payment for your mortgage, and that's for your mortgage charge for the previous month.
Correct.
Okay.
Yes, but everything else is going forward. Your taxes, your homeowner's insurance, everybody else wants it up front for an advance.
Right. And I can understand the reasons. We don't have to get into that, but I understand the reasons for that. Now, if we are closing today, they're going to be paying 14 days worth of interest on that loan until the end of the month. 30 days of September, April, June.
Correct.
31.
Yes, and when the real estate agent does the cost sheet, it shows that on their cost sheet. They usually do 30 days.
Okay.
And probably the lender would too show 30 days of
30
interest.
days.
So.
Okay, so it doesn't matter if it's a 31-day month or not.
Correct.
Okay. Thank you. Now we have your title charges. What are these?
Our title charges, it just depends. If you're getting title insurance, we don't charge a settlement fee. We don't charge a doc prep fee if you're getting title insurance and it's cash. We don't charge a settlement fee if you're, regardless, we don't charge a settlement fee. Our fees are very reasonable, $125 to prepare a new deed. Our notary fees are either $15 or $10. We have, and again, if they would want more information on that, they could be happy to look on your website or call me.
Well, we will have your information scrolling in a little ticker as this goes on, and we will make sure that your information's at the website as well.
We have minimal fees.
You have minimal fees, and a lot of this is governed now by the
Well, the title insurance is state regulated. So again, the state determines, it's based on the purchase price of the home, what the title insurance is. We don't, each closing company doesn't determine what the title insurance is going to be. Everyone, whether you're paying cash or you're getting a loan, you always want title insurance. It's protecting you from today and beyond, backwards. And there are two different types of title insurance. You can either get the basic, which again insures you from the day of the closing and back, or you can do the enhanced, which again goes from the day of the closing and back and also forward, which is a good thing. And it covers a lot of things like forgery and
identity theft.
Identity theft, yes. There's an awful lot of things that the enhanced policy covers. It's been around for a long time, but a lot of people weren't aware of that.
What else, real quick, about this that you want to go over that we should go over?
The other thing is, again, when you're bringing the cash to closing, you want to make sure it's either a cashier's check, which is a bank check, or a certified check. The certified check is your check. They punch the holes in it, and if it's lost, and the money's gone. So most of the time, you want to make it payable to your closing company, and you want that figure to be whatever the closing company tells you that the figure should be. Typically, our underwriters won't let us take checks over $500, personal checks, and some people think, because again, we can't guarantee that those funds are there. So you can also wire the funds to the closing company. That's fine. And typically we see either one. But you have to remember too, if you're pulling money to purchase a home out of a retirement fund, or you've got to make sure that you have access to that. I had a cash closing once where they were taking the money out of a investment, and that day, because she wanted to give me a check for $225,000, personal check, and I couldn't accept it.
Right. A lot of times your 401ks, your IRAs,
correct,
they're going to require you to apply for those funds ahead of time, and you do have to give them a reason, because early withdrawal of funds, it's a whole different tax issue that you need to discuss with your own attorneys and your own accountants. But you just cannot write a check and expect to withdraw those funds same day. Then the other thing and I just went out of my mind. Oh well, because it does happen. Unfortunately, I'm getting older. So you take care of the second payoff. You take care of the first payoff. Any other payoffs that the seller has. And the one thing that just came back to me, you don't bring the full amount of the purchase. You bring your closing costs. Of course, the bank sends their own money and their own wire transfers.
Mm-hmm. And I think the one thing too is payoffs. When the seller has a payoff, again, that's where that gets a little tricky, because again, they think they're paying, if we're closing today, they think they're paying this month. So they don't understand that it's really for last month and part of this month, and also until the bank actually receives the check.
Right.
So there's interest.
Yeah, you may be
in that payoff. So a lot of times they'll look online maybe to see how much their payoff is. Well, what they see online and what we actually pay off are two different things.
Right, because it's an interest accrued until the day the check
is received by the bank.
Mm-hmm. Mm-hmm. Well, Jan, this has been very, very informative. The half hour went by very quickly. We may be a tiny bit over, I apologize. And all of your information will be on the website at Home in Bethel Park. Please look at the scroll bar to get Jan's phone number. And I want to thank you for joining me.
Thank you. Thanks for inviting me.
Thank you. And I want to thank you all for joining us again at Home in Bethel Park. We'll see you next time.